Hi, everybody. It's Jim Black. Welcome to another edition of Know Before You Owe. I'm excited today to have a guest who's a legend in the renovation and rehab space around real estate and lending. Please welcome Mike Young to our show. Thanks, Mike, for being here. Appreciate it. So, Mike, you and I met, I believe, in 2003 or 2004. So only yesterday, basically. It was yesterday. But we met, and then we met working at a large bank. We had a program called the 203K FHA Renovation Loan. And that loan program is set aside to really help families renovate and rehabilitate properties that already exist and allow families to really get their dream home or renovation done with funds used from certain programs like government-funded programs, 203Ks. So can you share, Mike, a little bit more about your story and who you are and what you're all about?
Sure. In 1994, HUD decided to use consultants on their 203Ks. They couldn't figure out why the 203K wasn't being utilized much more than it was. So they ended up hiring a guy by the name of Ken Crandall, and he and I became close friends. But when I took the course, I was an appraiser, and I took his 2-day course. At the end of the first day, I asked him, I said, "You haven't taught me anything about appraising these." And he said, "Well, it's a 2-day course." And he sent me on my way. So I was excited. The next day was going to be all about what I wanted to hear. And at the end of that day, nothing. So I went up to Ken and I said, "Well, I still learned nothing about appraising." And he said, "Oh, you're an appraiser. You know how to appraise." Uh-oh. My dog's attacking my wife.
No
anyway, so he said, "What did you learn?" And I said, "I learned I want to be a consultant." And he said, "I did my job." Little did we know at that time that it would lead to a big friendship between the two of us. I picked the 203K apart from every angle. I decided then to be an expert with the 203K program. There weren't that many people that really.
So your 203K loan, for the audience, 203K does not stand for $203,000. It stands for FHA guideline, right? Specifically around renovation loans. Can you tell us what that 203K stands for?
Sure. The 203K is a section of the HUD guideline, 203, and the standard FHA loan is called a 203B. It's in that same realm, and the 203K is just a 203B that has a construction component. You can actually borrow money to fix up the house that you're buying or refinancing, all in one 30-year fixed rate loan.
Awesome. So basically this program, the government this isn't a new product, right? It's been around for how many years? How many decades?
Well, the 203B's been here since 1933. The 203K came on in 1961.
Awesome. And everyone, when you talk to lenders about it, they think it's something brand new, and they think it's something that just was created yesterday. And unfortunately, it's been around a long time, and you've been one of those people that's led the product.
Yeah, I can't believe it's been 30 years since I've been involved in this thing. I hear stories all the time online when I get into these chat rooms about the 203K, how bad business is. And I just say, okay, yes. The 203K is a sleeper product. If you know about it and you're in, then it's exciting. If you think you know about it and you're not in, you're not hearing about it. You don't know it's happening all around you.
Absolutely. And my backdrop, by the way, is an image of a renovation project, not new construction, but renovation, because this product is not for people buying land to build on raw land or unfinished land or new construction. It's really set up for people that live in a home that want to do a pretty good sized renovation project that can be done in, is it 6 months, roughly the time window again for this?
Well, yes, and they're talking about bumping that to 10 months now for the larger projects. My largest project has been $545,000 worth of construction. So that's a house. There's no two ways about it. But
so let's talk about an example, if you don't mind, of this product for our audience to understand what 203K is. So I own a house, and I have, let's just say I have $400,000 of equity. I want to, and that $400,000 of equity, actually, let's say I have $100,000 of equity. That's not enough for my project. I'm not able to get all the things I want done in $100,000 of equity. Maybe I need $200,000 total. How does a renovation loan work to make sure that I can qualify to do improvements for something that creates equity and value down the road?
Well, we've seen that happen a lot recently. I did one in Alamo. There was a 500 square foot house on a lot in Alamo, of all places. And for the people who don't know where Alamo is, it's a high-end district where you got lots of $1 million properties and multi-million dollar properties. But the borrower borrowed money on that, and they actually started building without a 203K loan. And they had a 4,200 square foot house. And I guess it was some sort of renovation loan, because we took it over years ago, and they had blotched it. This contractor had really screwed it up. So we took it over, and we were able to finish it on budget with the guy's original budget and correct the things that he did wrong. If you go to one of my websites, you can see a picture of that blotch. It's terrible. He put a beam right in front of their front window. As you sit in their living room and look out the window, he put a 6x6 beam there. But we got it done, and it's a beautiful home today. But the fun part of it, the total renovation was only about $400,000. I don't know what they had into it, but the appraised value was $1.2 million, and I would be shocked if it wasn't worth $2.5 million today.
Wow,
There's
that's
lots
amazing.
of that happening.
Well, you and I, the reason why I wanted to bring you on to say thank you for me personally was the fact you helped me on my own 203K loan. So I'm a lender, as you know. A lot of lenders say they can do things, and in reality, it's great to say you do things, but I actually lived through a project. And I don't know if you remember that project we had in Lafayette, but it was
very well.
Yeah, it was a property that I was able to buy in a distressed situation from a bank. It was not livable. It was not habitable, so I could not get a traditional loan. And when you can't get a traditional loan, it means you have to bring a lot more cash in or pay all cash to buy these properties. So fortunately, I had you as a mentor to help me navigate the way I could buy a home that was not livable. It was missing part of the roof and hadn't been inhabited for over 25 years. We were able to buy the property with a 203K renovation loan, build in the costs I needed from a retail perspective to get the home updated and complete to be livable. And in that process, I was very fortunate to have captured about $700,000 in equity by just doing the simple things to get me over the finish line, to allow me to stand out as a buyer who was prepared, who had great advisors like yourself that were able to evaluate the project with a budget before I bought the property. And the appraisal was done as an as-is and future value appraisal. So I was able to see what the value was today while paying for it, and what the improvements would give me in terms of value down the road. So it made me feel comfortable and confident that I was making a good financial decision. And you were the HUD consultant that was able to come out to the property and look at all the budget line items to make sure that I was getting a fair budget from the contractor as an independent third party. You're able to see the scope of the project to make sure they won't miss anything, and you're able to give me a great idea as to some of the time frames to expect and how long it would take. So I am a first-hand testimonial with Mike and his team, who did a fantastic job to get me over the finish line on my own project. So thank you so much for that. And I wish more people would know that the service you offer is not just about buying a property or renovating the property. They could actually hire you just to come out and make sure that they're making a good decision on understanding budgets, right? Don't you have a whole?
Yes.
Can you tell us more about that? What would a client expect when you come out to the property? What are your services?
Well, what we do, every consultant is supposed to do certain things. We actually do them. And what I mean by that is our job is to come out, assess what needs to be done, what has to be done for health and safety, minimum property standards, and add whatever you, the client, wants to do to that home too. So it's a combination of those two things. And then we're going to give you a bid. We're going to bid the job as if we were contractors and tell you this should cost approximately this amount. Now, our bid is not going to be the one that we end up with. It could be higher or lower. It could be higher. In California, it could be higher.
Yeah.
So anyway, what we do, and contractors have told me many times, will you take that off of your website? That know your contractors, know your construction costs before your contractor bids. No, I won't. I've been bidding since I was 12 years old. When I was a kid, my dad was a sheet metal contractor, heating and air, and the only time you had time with him is because he was building a business. He would be on that floor with his blueprints doing takeoffs for heating and air. When we get through with dinner, he'd get in there and lay on the floor in the living room and spread his plans out. And I was 12, I'd jump on him and wrestle with him for a while. And finally, one day he just turned me over there and said, look at what I'm doing. Maybe you'd like to do this. And within 6 months, I was actually bidding jobs for my dad, and he would bring 2 sets of plans home. And we would both work on a set of plans. And I did that. So when I heard about the 203K and became a consultant, I felt like I was coming home. Every time I do a bid, I think of my dad. And he passed away in 2014, but he hasn't passed away yet. He's still here.
That's awesome. That's so cool. You have a legacy and something you love. You make a difference and an impact in people's lives. And every probably project is unique and different for you, right? Nothing's...
Absolutely. That's one of the exciting things, that every project is totally different. We've done fourplexes. We've taken mixed-use buildings, taken warehouses and turned them into live-work. It is exciting. One of my live-work, if you go to one of my websites, you'll see a picture of looks like a warehouse, but when you roll those roll-up doors, they've got a regular business, facade inside. The door is just to protect it at night, or in case of local riots.
And it seems like people really need to, if now more than ever, they need to understand people are having a hard time moving, right? Seniors are retiring, and they're working or they're living in their same property. They need to make adjustments, maybe a downstairs master bedroom, maybe a larger closet, maybe an ADU in the back. I'd imagine you're probably seeing a lot more refinance opportunities right now of people realizing they shouldn't move because property taxes could be outrageous if they moved, or their home insurance quotes, or they want to be close to their family or their friends. Like, are you seeing more refinances in today's market?
I would say yes, many more. And the ADUs in California, with that law that passed in California, allowing ADUs to be added to a fourplex if the lot's big enough, you have 5 units. It's silly not to, but it's not 5 units, it's 4 units and an ADU. Who would guess?
That's huge for our guest viewers. You have to realize that everything is considered residential up to 4 units nationally, but with 4 units and an ADU, you would think it'd be 5, but it's actually still 4. So it adds more value to that property and more cash flow. And now, luckily too, a lot of the restrictions are gone from those ADUs. You can rent them out, you can not rent them out. It's your choice versus them being mandated from the state level. So it's another way to create affordability for multi-family or multi-generational family housing. It's something that's here to stay, right? We're not building more land, as you know. So that's an important thing people don't realize.
One thing we had back in 1995, 96, one of our lenders was Hispanic, and he would run ads in the Hispanic newspapers and media. And he had a radio show as well, and he would run ads for how to live rent-free in America. And many times the Hispanics will live as a family. They'll buy a fourplex, and one person will be the buyer maybe, and two units will pay the mortgage typically, and the third unit that he's not living in pays for his groceries.
That's
and
really cool.
We did a ton of fourplexes. That would work again today.
Yep. So one of the reasons why this program was created back in the East, I think it started back, was it in Maryland? I think Maine or Massachusetts, I forget where on the East Coast, but what was happening, certain parts of the country assess property values every year, right? So California is not that way. California does it pretty much one time when you acquire the property. These municipalities and local government constituents were losing property tax fees, and it was creating issues around security, safety, schools, all those things in the area that these houses were in. So the government came out with this product to hopefully create a higher tax basis by improving the properties and then being able to sustain or increase the level of property tax assessment to be able to help create growth and stability, or even spark some more growth in those specific communities, which is exciting. And the product really hasn't changed in a long time either. It's just funny how many products, how many times is this used a year right now on a national?
How many times what? I missed that.
On 203Ks, how many 203K units are done every year?
Oh, there's a link that you can go to and see those exact numbers, but I think it's about 20% less this year than it was last year, or year before last. Before COVID hit, we were at one number, and now we're at about 20% of that number. And I can't tell you offhand what it is.
And it's fractional. I know that. I remember the stats from like 10 years ago. It's fractional though. Like it's probably less than 30,000 units in the entire country, something of that nature.
Yes.
We'll share the stats for our viewers later, but it's crazy to think that this product is really set up to invigorate the vision of someone's dream of improving or renovating a property, or like myself, buying a distressed property that not a lot of people could buy, improve that property for the likelihood of staying there for the long run, right? It's a principal residence loan, so you have to plan on living in this property, and you want to live in a property after you've done a lot of renovation, because it's sometimes a little more of a headache than they're worth for some people. But to me, it's a great way to create your own home and your own dreams and vision around the things that matter to you, the things that you need to have, the things that you'd like to have, and then your dream list of items. And hopefully they all fit in that same budget. But when you break down a budget, if I recall correctly, your draw request form is it 35 elements to a bid? Is that correct?
Yes, that's correct.
So 35 budget items, from masonry to foundation to concrete to windows up to electrical. All those elements are broken out, so even a first-time home buyer can better visualize the project they're getting into and see where the most costly elements to their project are, which is a very helpful tool. Even if you just hire Mike and his team to go through that process, you'll become a lot more knowledgeable in making decisions down the road, even if a 203K loan is not right for you.
One of the most exciting things that I get out of 203K is having a borrower. They really don't envision, like we do, the finished product. They talk about it, they say this is what I'd like, but they don't actually see it in their mind like we do. I can actually see the product finished in my brain. So one of the most exciting things I get is when I go to that last draw inspection and the borrower's there and we're turning the house over to them, the finished product. And I can remember this one young lady in Oakland, when I took her there, she had stayed away from the house. Except for draw inspection, she had stayed away from the house. And we got there and she walked into that house and burst into tears, happy tears. She said, I can't believe this is so much nicer than I thought it was going to be. But one of the things contractors typically do is they bid so that nobody can bid against them. Their bids include, they might couple interior doors, exterior doors, and windows as one group. We break those down because once we do that, we found that we can pretty much see where he's at his bill, where he's asking for more than he should be asking. But the excitement is all about that borrower seeing that product, that house finished, ready for them to move in, and making it better than they imagined.
So let's talk about your specific role. You mentioned the draw request. So I get my loan approved, and the first draw or first payout on my loan is to pay off any outstanding balances I have on my mortgage. So I get a baseline here, and then I have a budget set aside for progress complete, which means as I go through the project and having be completed, you come out with your team to inspect the work, right? To make sure that it's been done up to visible standards, and then that portion of the draw or prorated amount is paid out. Is that correct?
Okay, the contractor calls, he's ready for a payment for the work that he's input. And we go out and look at the items he's requesting on, and quite often he's correct. You know, he might want the driveway paid for, and if it's it's there and it's in good shape, we can authorize payment and he gets paid. But he gets paid for work that's done. Now, recently, in the past year, we've been seeing a lot of lenders that are allowing an upfront material draw equal to 50%, up to 50% of the materials on the project as an advance. And I am not a big proponent of that.
Where do they sit, right? Do those actual materials get used in that property and project, or do they disappear and go to the next
they
project?
Go into another property. Yeah.